Hi everyone, Michael here. In this video, I'm going to be going over how mortgage rates are continuing to increase at a rapid rate. Right now, the housing market's booming. Everyone thinks it's great. It's all sunshine and rainbows, money printer go brr. Everyone's making money. And even if you say the C word, crash, people will come and crucify you. And what I think is rising mortgage rates is one of the biggest risks for the housing market. So let's get into it right now, the latest housing market data for the US and Australia to see how much mortgage rates are rising. Okay, first things first, let's go with the latest mortgage housing data in the US that was just released today. I just love the smell of new data in the morning. And you know what, guys? It's not looking good. It says here, today's best mortgage rates, April 5th, 2021, majority of rates rise. Rates were mostly higher than a week ago. Rates for the 30-year fixed rate mortgage, 15-year fixed rate, and the jumbo rate increased. Okay, let's start out with the 30-year fixed mortgage. So the average 30-year fixed mortgage has increased to 3.27%, and that's an increase of 0.05% from last week. And you may not think that's a big deal, but it's compounding every week. And you know how powerful compounding is. And that brings the 30-year fixed rate mortgage from a low of 2.65% to now 3.27%. So it's getting closer and closer to a 1% increase in the 30-year fixed rate mortgage. And for what I say and what most real estate experts say, for every 1% increase in mortgage rates, house prices can fall 10% because people's borrowing capacity gets reduced by 10 to 15%. And you may even think, well, a 1% difference in mortgage rates, that's not going to make a big difference. But if you add this onto prices already inflated by 20%, because now home buyers are having to pay 20 to 30% over asking price and waive all contingencies, which is a huge risk because you don't know if you're going to buy a dud property with something structurally wrong with it that could cost you hundreds of thousands of dollars. Have a look at this, and this will prove to you how powerful just a 1% increase in interest rates is. Plus, if you're overpaying for a property by 20%, like what you have to do now to compete in this market. Okay, say for example last year, an average house, say for example $500,000, and you could get a mortgage rate of 2.65%. That means your mortgage repayment would be just $2,025 a month. But have a look how big the difference is with a 20% increase on the asking price and a 1% increase in interest rates. Your monthly mortgage rate is now $2,755, almost increasing by 50%. And I hope that shows you how powerful just a 1% mortgage rate increase in a rising market can be. And you know what that's going to do for the housing market is many people just aren't going to be able to afford that. And what we're seeing right now in the housing market is just simply supply demand. There's not enough supply and there's a huge amount of demand. But what's happening now is a lot of first home buyers or potential home buyers are just giving up because the asking prices are too sky high and the mortgage rates are increasing. So now they can't borrow what other buyers could borrow last year. And we're going to start seeing a weakening demand of home buyers. But you're seeing a lot of sellers, they're seeing the awesome sales records that are getting smashed. So there's going to be more sellers coming onto the market because they think now is a great time to sell. And the 15 fixed rate mortgage has increased as well by 4 basis points. That's gone from an average of 2.47% to 2.51%. And this is now the 8th consecutive week that mortgage rates have been increasing. What I see is happening in the housing market right now is there's so much FOMO and there's so much people that are being blinded by their emotions and there's so much greed in the market right now. And what does famous investor Warren Buffett say? Be greedy when others are fearful and be terrified when others are greedy. And I'm terrified right now because greed is through the roof. It's exactly like what happened in 2000 with this dot-com bubble, and it's exactly like what happened in 2007. The only thing I could say that's not as crazy is the risky lending, but we are seeing banks starting to increase their risk appetite because, hey, if they make a mistake, the Fed or the RBA or the central banks will just come and bail them out, right? And what you have to know is the way markets work. First, it'll be the investors that get in, then it'll be the smart money, the institutions that get in, and it's always the mum and dads and the retail investors that get in last. And that's what's happening now. Since 2012, we saw prices bottom and the investors got in, they started buying up properties and the big institutions started buying up properties. And now we're getting to the end of this debt cycle and the longest bull run in history. So we are getting very close to a crash because like I said, this is the longest bull run in history. Normally cycles go in 7 to 8, max 10 years, but we're now heading into the 12th year of this bull run. And Yahoo also says there's 6 signs that mortgage rates are about to go up. Another 10 lenders in Australia have increased their 4-year fixed rate mortgage. This comes after Commonwealth Bank was the first bank to make the first move, and no one wants to be first, but no one wants to be last. So now the other banks are now jumping in. It says here, lenders are beginning to increase their interest rates for 4 and 5-year fixed rates with warnings this trend indicates broader increases across variable rates aren't far away. Bendigo Bank, Bank of Queensland and Aussie Home Loans are among the lenders who have hiked rates. And don't go anywhere, because after I do this quick summary of these mortgage rates, I'm going to tell you what this means for the housing market. With a number of lenders starting to increase their fixed rates, it's only a matter of time before more lenders start increasing their variable rates, they said. And I think this could be a risk for the housing market because people always adjust their budgets, and when their mortgage repayments go down, they normally adjust their lifestyle and increase their spending to make up the difference for the lower mortgage repayment. So people are getting very used to these low mortgage rates and they're going to increase their spending, and they may refinance and top up their loan and say, look, I can afford it. But what's going to happen is in 2 to 3 years, when the mortgage rates go back to the standard variable rate, interest rates could go up 2%. And all of a sudden they could be in a rude shock and all of a sudden find out that they can't afford to repay their mortgage anymore. And not to mention, everyone's forgot about all these interest-only loans that are going to be rolling over this year and next year. But hey, they don't want to talk about that now because in property, we trust. And have a look at this. Landlords waste no time issuing notice to vacate after eviction moratorium ends. And this has finally ended in Australia and it's been extended in the US, but eventually they're going to have to face the music and going to have to end these eviction moratoriums. And people think this won't have an effect on the housing market, but if all of a sudden there's a bunch of these tenants that don't pay their rent, well, what do you think is going to happen to the mum and dad investors? They're not going to be able to absorb that shock, and they're either going to have to take on more debt or force sell some of their properties. Everyone, I just have to wake you up. We shut down the economy for a whole year. We shut everything down. Businesses shut down. People stop paying their mortgages. People stop paying rent. You think that's not going to have an effect on the economy and effect on the housing market? It definitely is. You think they can just wipe the slate clean and brush everything that happened last year over to the side and there's going to be no consequences? There's going to be no consequences of printing all this money. There's going to be no consequences of increasing the money supply by 40%. Wake up, people. There definitely is, but they don't want you to be informed about it because guess what? The housing market, the stock market, the financial system, there's nothing backing it. All it backs is confidence. People having confidence in the system. As soon as that confidence drops, like what happened in March last year, that's when it comes crumbling down. So that's why they're going to keep coming out there and giving you misleading information that everything's great, greatest economy ever, but really behind the scenes things are failing and the only thing that's propping it up is all this money printing and bailouts, but that's unsustainable. And have a look at this. Even though the CDC eviction moratorium has been extended, housing advocates say evictions are continuing at full steam despite a federal ban. Because there may be a lot of landlords that are renting privately and they're just telling the tenants to get out and they may not know their rights and so they're getting evicted anyway. So even though this has been extended, we still are going to see a lot of evictions. So everyone, what you must know is even though that everything looks great right now and maybe the housing market won't crash tomorrow, maybe it won't crash next week, next month, but have a think about this. Use this for example. Say for example, I give you $100,000, say go out there, live your life, have fun, go out there and spend it all and live it up. YOLO baby. But next year I'm going to come back for you and you got to give me $200,000. Would you take up that offer? Take the 100K now, feel good now, but knowing that next year you're going to be in a whole bunch of pain? Well, I wouldn't, and I know a lot of people wouldn't. But when they think with the stock market and with the housing market, all they think about is the short-term gains. Wow, my house can go up 20% in a year. The stock market can go up 20% in a year. Who cares about what's going to happen in the future? Give it to me now. And I'll relate this example to the housing market. You could get in now and your house could go up 20% over the next year. But what if all these risks do mount up? All the stimulus gets taken away, all the government programs get taken away, inflation starts to get a bit out of control and then they have to hike interest rates to get inflation back under control. And also remember, to get a house now, you have to pay 20 to 30% over asking price. So then when all the FOMO does get taken away and all the stimulus does get taken away and more supply comes on the housing market. So if you've made 100% gain on your $500,000 house, Well, if house prices drop 30%, well now you're $50,000 underwater. So I urge you, don't just look at the short term. Really think about the big picture on what's going on in the economy, because this is not a normal economy, and this boom is scaring me, and the amount of greed that's in the markets is scaring me, and the amount of complacency. People saying, look, it hasn't crashed yet, it's boom, so who cares? I'm gonna go YOLO margin and call options in the stock market. I'm gonna take on as much debt as I can in the housing market. But let me clarify one thing. If you need a house for your family, you can afford it, it's well below your budget, you got a good deposit, it's gonna be your forever home, you're gonna live in there for 10, 20 years, you don't care if house prices fall over the next year or two, just go ahead and do it, because it is very hard to time the market. But if it's gonna stretch your budget to get it into the housing market right now, you don't have a good deposit, you might not be able to afford those mortgage repayments, don't FOMO in right now, because it is very risky. For my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date with the latest housing market and global finance news. And for my Australian viewers that are interested, link in the description, you can get a free stock GoPro, Nike or Dropbox. And for my viewers in the US, you can use link in description and download Webull. When you deposit $100, you'll get 2 free stocks. Thanks again for all your support, everyone. If you're bored, I'll pop up some of my other videos here. I'll see you there.